Good evening, everybody. How is the sound out there? And welcome to tonight. Good? All right, everybody give a nice good evening if you're out there and you have fingers available to type. It's 5 o'clock, at least it's 5 o'clock on the east coast of the United States and probably east side of Canada and east side of South America, I guess. Probably some little sliver of near the North Pole and South Pole, it's got to be 5 o'clock. And I have a sign downstairs that says it's 5 o'clock somewhere, so. Let's get going for tonight. Anybody who's new to DTS, welcome. If you have any questions, feel free as we go through. Tonight will be, I think, an interesting talk. Let's go to our first slide here and get underway. I don't think we'll be pushed for time necessarily. You received this in your email. It says, this is based on an article that I wrote. I actually wrote a long time ago. I don't even know how long ago. It's something that's been around for a while, and I've always kind of liked this one. And just kind of something that came out of my head, and I don't think I've really changed it much over the years because I think it was written pretty well the very first time. The article, as we go through this, I'll keep trying to remind you. In the beginning here, for those of you that know this article or have maybe saved it or archived it, I changed the order a little bit to make it flow better in a presentation because I wanted to get some of the reading out of the way up front, and then when we get to the parts, that's kind of my definition. We're going to look at some charts and kind of the best I can give you some examples of how what I say applies. So the first couple of slides here are kind of reading, I guess you'd call it the journey that a lot of people take. And then I'm going to get to what my definition is and give you some concepts to kind of back that up, okay? As I read this a few times doing this, I really, sounds stupid, but I really enjoy reading it myself actually, which is kind of strange maybe, but Webster defines trading as to engage in frequent buying and selling of stocks and commodities, usually in search of quick profits. Notice the key words that even Webster knew to include, in search of, making an implication to the fact that quick profits are ever so elusive. This definition works fine if you're learning English as a second language. It gives you a notion of what the word means. It does not do justice to the process. I'm going to take this article to share some ideas regarding what makes up the essence of trading. This is my definition. You do not have to agree with it, but perhaps if you read it closely, it may open up some ideas. As a matter of fact, if you get any light bulb moments, please email me. And as we go, some of you may kind of get a chuckle or a laugh or even maybe just type a number 1 if you can say that that relates to you, because I think this is probably the journey of almost everybody who gets into trading. By the way, who's this for tonight? Well, there's always a variety of people here. Hang on, back up you. There's always a variety of people here at these presentations, and they range from, naturally, the people who take my seminar program are kind of required to get these because I think this is all great information for the learning process, wherever you are. So my seminar people are required to either be here or to see the recordings of all of these. But for a lot of people, I think a lot of people who attend these are people who are in the process of trying to see if trading or investing for themselves is right for them, if they have a place, if they have a way in to do that. I think a lot of people are, maybe they're able to back off another job and want to supplement the income with trading. Maybe they're getting ready to retire. Maybe they just want to kind of go to a full-time trading type thing. But they've been kind of kicking the tires, looking around. And I think that's the majority of people that show up for a type of event like this. And it's funny because somebody will be around attending these for a while and all of a sudden, boom, they're emailing me and they want to do this and want to do that. So it's a good place to kick the tires and kind of, see what's going on. So I think for a lot of people, this will really relate for a lot of people because you're probably in this process somewhere right now. And hopefully this kind of clears up what the process should be for you. So continuing on. Before we get to my definition, I just want to review the common journey many people have. Many people invest in the market by placing a bet on the future of the stock market as a whole. Usually the bet is the market is going up. For those who decide to make income by actively trading, they usually feel that the market is easy. They have been inspired by a great or not so great book, a free seminar, or an infomercial, and they've heard of great success, been introduced to a strategy that worked at one time, and feel that since they are clearly above average in both intellect and excuse me, since they are clearly above average in both intellect and perseverance, this stock market game will be just another conquest. Their definition of trading is likely along the lines of buy low, sell high, over and over again to produce a profit. By the way, trading, investing, same words to me. Just investing is just trading on a longer time frame, but we do the same concepts. Soon after trying the concept that they learned, which had introduced them to the market, they become frustrated. It's not working. They have probably justified many reasons why it is not working and have concluded that to truly master the markets, they need more information. And again, if any of you ever relate to this, just feel free to comment out there. Therefore, they go on the crusade to become experts at everything. They read Barron's, IBD, Fortune, and Money. I'm not even sure if all those are still around. They study all terms learned on by sea. They become an expert on all news and economic numbers. Suddenly, the party conversation becomes analyzing the last book to bill number. I'm not even real sure what that is. Or how foolish Greenspan or Bernanke was, or how Yellen is. That's funny, Yellen's still around. The quest now becomes to find stocks that they have determined to be undervalued based on superior knowledge that they now have. Their definition of trading is now likely along the lines of looking for obvious, overvalued, and undervalued situations to capitalize on. Soon they discover that undervalued does not mean the price has to rally. If it does rally, their timing may be so far off that being right did not matter. They also find that they are not right very much. They also discover that undervalued goes hand in hand with really weak, and they are now starting to think they are still missing something. They're also getting frustrated. This is supposed to be easy. Most still view it as easy at this point. They simply have had some bad breaks, some rotten timing, some poor luck, and naturally needed to overcome some growing pains. Can anybody relate to this at this point? You sound like a common starting for a lot of people. Nobody wants to admit. I mean, seriously, I've talked to people all the time. I think this is everybody, right? To some degree or another. I'll tell you my story in a minute, but my first 2 months trading, you're going to see, well, a cartoon picture of my desk overflowing with all kinds of crap. Yeah, it's what everybody, I think, goes through. The question is, how do you get beyond this? Because this often leads to a very frustrating stage for a lot of people. Unfortunately, it is at that time that they become the most susceptible to the prey of the holy grail vendors, those who are selling products that are guaranteed to make you money by following simple how-to manual. When this crosses that, you buy. When this changes color, you sell, etc. Their definition of trading has now become blurred, and they start to think about many in-depth questions about fundamental versus technical, and maybe using technical indicators. Desperation and lack of confidence often sets in, and their definition of trading is sounding more like buy whatever the newsletter or market guru says. If this flow sounds shockingly familiar, do not be surprised. At some point, a few will wipe the slate clean, seek out an education to learn to think for themselves and evaluate what is happening, not what they're being told. They come to understand that trading is a complex, ever-changing environment that requires understanding as only derived in a total learning process. Let's take a look at my definition of trading. First, I remember, in the beginning, I was not unlike any of you. I just kind of, backed into trading, so to speak. I didn't know a stock from a bond when I started. I had, when I dive into something, like I'm sure most of you, I kind of felt like those words said, I'm intelligent, above average, extreme perseverance. And I dove into it and I hit it from all aspects. I listened to things and listened to people and read stuff and learned this. And all took it with all the grain of salt. And I remember, I don't know, have anyone else ever done this? You remember I took and I had subscribed to a few different money magazines. And I went through and I took the recommendations. They'd have the top 10 picks of the year or whatever, their top hottest stocks. And I tracked them all for 6 months. You know what I found out? From, I think, 5 magazines, taking a couple from each magazine of their best recommendations. You know what I found out 6 months later? Come on, you can guess. It's not going to be shocking to you. Yeah, just a perfect zero. Just perfect zero. Yeah, just perfect zero. I'm thinking to myself, okay, these are the best of the people. They're writing the magazines. This is Barron's and Money Magazine. Yeah, these are the best. And yeah, they had some big winners. And of course, that's what they advertise. They come back with, look at this winner we had from last year. Remember, we sent you, this is one of our top picks. But if you look at all of their picks together, they were net zero. I mean, they're just down here, whatever it was. I thought, this doesn't seem to be the right way to do things. But I remember then as I really got to understand technical analysis and the fact that technical analysis is not a battle between technical analysis and something else. Technical analysis is the sum total of everything. When you get to understand it, and I had this moment, and please, if anybody has had this moment, please type a 1 on the screen. But when it came to me, I took all these magazines, all this crap, I threw so much stuff out. It just this huge burden lifted off of me. All the stuff I was trying to do and wrap my head around. And it was just like, the sky parted. It's really what it was to me. I remember the moment and just got rid of all this stuff, stopped focusing all this crap, and sole, total commitment focus to one thing. And that was understanding what I then believed to be the correct answer, and it is the correct answer, and that is just technical analysis. That is the sum total of all this other crap that goes on. It doesn't matter what people say. It doesn't matter what people, come on TV and blah, blah, blah. What matters is where the money goes, and that's all that matters. Has anyone else ever had that kind of clearing feeling, guys? Anybody? You got into that point where you just all of a sudden you see the light and it's like, get rid of all the rest of this crap. And it's hard for people to do that. I know so many people that are, pretty active and they when they get a hold of me, they're still looking and doing the wrong stuff. And they feel, for a lot of people who are smart and successful, they feel like they have to justify their success in a sense. You know what I mean? They can't just look at a chart and close their eyes to everything. They have to go understand what they have to hear the news and understand the news. And I better get into today, the interest rate thing, well, blah, 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 blah. You know what? The smartest people in the world don't know crap about what's going on about any of this stuff. I had a news show on for fun today, right? So 3-4 minutes after the announcement, the market flew higher. And what do the geniuses on there say? Well, the market certainly loves this announcement today from the Fed. No doubt. Look what they had to say. Clearly, this is all good news for blah blah. And before they weren't even done with their stupid comment, and the market's already negative. So all you hear is just people regurgitating the past. If you want to understand how to make money, it's technical analysis. So I just want to share that moment that I had a long, long time ago because I just kind of proved to myself what the thing to do was. And as you go along and you learn, there is absolutely no question what it is. Here's a definition to consider. Now we're going to get into some talk examples and that kind of stuff. Trading is using technical analysis to find a moment in time when the odds are in your favor. Then trading becomes a matter of your entry and management. In other words, it's having the knowledge to know when the odds are in your favor, having the patience to wait for that moment, and then having the discipline to handle the trade properly when it goes in your favor and properly when it goes against you. Let me repeat that just for fun. I know it's just simple words on a piece of paper, but in other words, it's having the knowledge to know when the odds are in your favor, the patience to wait for that moment, and the discipline to handle the trade properly when it goes in your favor and properly when it goes against you. I can't think of 3 simple sentences or maybe 3 words that better qualify what it is to be a good trader. Can you? Now let's dissect it a little. I'm sorry, second paragraph. The opening words are using technical analysis. Now I know Webster's definition would let you trade fundamentals, but not mine. I feel there can be no argument that the opening words are not a misprint. We begin our search on the charts. This is the only place where we find truth and useful information in the markets. We do not find useful information from analysts, brokers, nor from accountants. So I have a chart example here. This is a trade from this week. And again, like I say, whenever I have trade examples, I try to make sure they're from, the last couple of days, not from, a remote snowy winter in 1912 or something. This was UL, and the reason it's in here, of course, as you can see, is because UL on the 18th got some really bad news and reacted with a UL, a world record gap down, followed by a world record red size bar. Devastating news. What was the news? It was Unilever could lose credit rating with the purchase of GSK Consumer Arm. That sounds pretty bad to me. I don't know just how bad that is, but there's the biggest red bar on the chart. So what's the point of that? Well, the point of it is Day later, it gapped up. I looked at it that day. I never did anything with it. 3 days later, it gapped up again. So my kind of question for you is this day right here, this is Monday, it's going to open right here if you can see where I'm pointing. It's going to open right there. What, give me some thoughts about this concept, this chart. Is this news too bad to consider trading this long? If you're looking at the chart, is that chart too extended now to consider trading this? Would you trade it long or short? Do you like it, not like it? Too sloppy, too extended? News too bad? What do you think of the chart? This just doesn't ring any bells with you? Or what do you think of the whole situation? Fake news. I don't think it's fake news. I don't know what it is. I don't think it's fake news, but looks like a coin flip. Well, this wasn't a coin flip to me. I had this chart on my screen ever since this day. And in this day, I felt it was the best thing I had on my screen to trade long. Confirmation? What would confirmation be, Vic? What does confirmation mean? I don't. That's a word people say a lot, and I actually have a presentation about. The presentation is called "Confirming What." It's a great one to watch, I think. If you're waiting for confirmation, I don't think you're making money. I understand on one hand. I mean, yes, you want to be sure your trade, but I don't know what it would be here to wait for confirmation. I wasn't waiting for confirmation today. And Caden, no, I think it's just a reverse, Caden. There are nothing but buyers here in this case. This was my top pick this day for a trade. And the point of simply being, this is the bar after the gap to there. That's the daily chart after that. And it also just gave a perfect intraday pattern. This is the chart that day. Boom, boom, boom. It was certainly the best trade of the day, one of the better trades of the week. And it wasn't any super home run. It wasn't anything great. But it was a very nice trade. And the point simply being, when do you think I looked up that news? When do you think I looked up that news about, they lost their credit rating, whatever? Did I look that up Monday to see if this is still an active story? Am I concerned if people are concerned about that news? I mean, just because you're making the comment, I don't agree with that because I have to look when I made my decision. I made my decision, right there. 5 minutes into the trading day. So there was no volume to see. There was no confirmation. There was no anything. I'm not sure where on this chart pattern you would say, where would you say that you are confirmed that it's bullish? See, the problem is by the time you're confirmed it's bullish, you're at your target already. So you have to see the chart well enough to say that is bullish. Now, you do get to look at the intraday pattern and try and keep you out of a bad trade. So there are some things I look for to try and make sure I have better odds it will go up. But other than that, you're kind of making your decision as much as you can ahead of time. Otherwise, it's too late. Yeah, when did I check the news? Yeah, I never did. I checked it to do this presentation. Well, I started this last night. I finished it today. I checked it last night, I guess. But I only checked it for this presentation. In other words, I never knew what the news was. Back to that daily chart. I want to make sure you understand that I do exactly what I'm telling you. I had this on the screen this day. I did not end up trading that day, but that day I had no idea why this stock gapped down nor gapped up. But what good would it be for me to know what this news was? What would I do with that information? It's the worst news in the world. It's the best news in the world. Who cares? Nobody cares. You shouldn't care. It only clouds your mind to sit there and try and figure out what it is. It doesn't matter. What matters is, maybe somebody can tell me, what does matter? Obviously, there's some huge story one way, a big story the other way. Maybe the story was negated. I don't even know. I don't even know what the story was the next day. I didn't even look it up. I don't care. But what do I care about? Because it's the basis of technical analysis. What do I care about? Exactly. The reaction. The reaction. Technical analysis is the constant analyzing of the battle between the bulls and the bears across multiple time frames. That's all it is, right? That's all it is. If two teams came to play football and you had no idea who these teams were, they're just made up of people from other countries or something or other planets, who knows, and they start to battle. If you had somebody handed you a piece of paper and said, well, the green team is favored to win because our analysts feel they're the better team, but then you watch 2 quarters of the football game and the blue team is killing the green team, do you bet on the green team or the blue team the second half? That's what technical analysis is. It's I don't care what you say. I don't care what you're telling me. I want to see where the money goes. It's the ultimate thing of follow the money. So there's patterns that, and for a lot of people, when I say that follow the money, it's not as simple as just, like somebody just said, by the time you're proving it's going up, it's too late to get in. You have to understand the chart well enough to see the little signs that tell you that the bulls are going to beat the bears here. And then you, quote unquote, place your bet because you have high odds that you're going to be right. You're not always right. But to make money, you have to make a decision. You can't wait until you're at target 3 and then decide to get in long, right? Oh, Chris, don't even go into it. I don't really follow, like I'm not the guy that sits there watching sports all day. That's not me at all. But, I'm in Tampa, Tom Brady, come on, you gotta get interested. So, I mean, and three of the favorite teams lost. Come on, ridiculous, right? Uh, and it's funny because actually in my head I was working up this thing about the playoffs. That is a lot like trading. I was trying to get this across to somebody in an email a couple times, and I couldn't get through to them because one of my points is that when you go to find, we try to find some great charts that give us good odds because the setups say, hey, clearly there should be an opportunity to move higher, move lower here, whatever it is. And one of my big things is once you find, let's say I scan 1,000 charts and another couple hundred charts and I prepare for the day and I come down to 6 charts, right? I don't know which of those 6 are going to work. You can't sit there and rank the charts and tell me now that you know which, you know what I mean? It just kind of pot luck at that point. All I know is that of those 6, there's good odds that on balance they'll make money. Now I may pick the wrong one one day, I may pick the chart that didn't work and then I'm mad because 5 charts worked and 1 didn't, I picked the wrong one. But that's kind of like the playoffs, right? I mean, the 3 number 1 teams, the 3 top ranked teams lost, but is that really shocking? I mean, is it really the case that if, one's ranked 2 and one's ranked 3, that 3 couldn't possibly beat 2? No, it's just kind of a flip of a coin, right? So, boom, boom, and then you get a 5-minute, you get a chart then to help confirm intraday. So let's go on. If the point of that section was I was reading my article and the first thing talked about was that we use technical analysis and that's it. And if you want any more information on that, I do a talk about fundamentals and what makes prices move in general at the Introduction to Mastering Technical Analysis event, which is once every 6 weeks. The next one's not until February 25th. You just missed it because it was a couple weeks ago. So mark your calendar to attend that. You'll get an invite for that. Okay, so continuing on. So I don't want to keep backing up to the prior thing, but we left off here. So we do not have useful information from analysts, brokers, accountants, et cetera, et cetera, et cetera. And then the article continues in that pretty brown paper there. Next comes a moment in time. How long is a moment in time? Remember, this is from the definition, right? That job, use charts, find a moment in time where the odds are in their favor. How long is a moment in time? Well, it depends on your time frame. For a core trader, that moment may be a day. For a swing trader, maybe several minutes. For a day or a scalp trader, maybe only seconds. The point is that there's only one moment when that exact trade is proper. Anything past that moment and the trade is gone. Note there may be other similar trades that occur later, such as buying the first pullback, etc. But these are separate trades. Each one of them will have their own moment. So in other words, for any strategy, any concept you're looking at for any trade, I mean, just think about it. There's theoretically the perfect moment. Now, I'm being a little extreme to say that, one moment later it's too late. But every moment that goes by, you're missing that perfect opportunity. And at some point, it is too late. Most traders begin entering trades at a moment when it's way too late. Way too late. Why? Because most traders want to see their theory confirmed by all the other traders. So they want to see everyone get into the trade before they do. But think about it. If everyone gets into the trade before you do, where does that leave you? See, we have to be smart. We have to be smart enough to, I like to call it, be the second person through the door. The first person through the door is the one that gets shot if somebody's there to shoot you. But you want to be the second person through, but not the 100th person through the door out of 100 people, because there's nobody there to take you to your target. So the key of technical analysis is finding those moments in time, the perfect moment. Naturally, there's a balance between seeing some kind of confirmation, but if you wait for too much confirmation, you've thrown the whole trade away. Remember that every dime, let's say on a longer term trade, every dime that you wait has a two-prong effect, because for every dime that you wait, if this is if that's going to be your entry, your stop is on the chart and you can't change that, right? Your target's on the chart, you can't change that. That's simply what it is. It doesn't matter when you get in. You cannot ask the chart to move to a higher price just because you got in late. Is that correct, everybody? We may not have any idea where the chart's going to go, but it's going to go wherever it goes, right? Regardless of where we get into it. So if I get in here, okay, there's where I got in. There's my stop, there's my target. If I get in here, it's a two-prong effect. In other words, I've lost 30 cents from my target and I've added 30 cents to my stop. So you have that double effect. And yes, that does directly 100% affect what you're doing. So we do want to have that balance between not stopping out because we're just taking random trades, but we also can't wait where being right makes so little money that it's not, well, it doesn't make money in the long run. All right. Moment in time. I bet you there's a trade here for that. So this is a longer term trade. There were two longer term trades this year so far. And I just want to show you what I consider to be a moment in time. This is in the long-term trader. So again, several of you here probably, have seen this or took this trade or whatever. This is a longer-term trade. It's supposed to be a long-term trade. It actually hit a target one in a week, which is, exceptionally nice. This is a short on MU. It was done on wherever the date is on there, on the 13th. And you ready for this? This is shorting that. Do you see that right there? Now I just want to look at the weekly chart. I'm not, running through the whole strategic concept, but shorting that topping tail, that's quite a moment in time, I would say, right? That's not having much confirmation, is it, log? That's not much confirmation at all. Shorting that right there, and then boom, it just happened to, next day it stayed very strong, a little scary. And then it dropped 6-7 days in a row and hit target one. Target one was right here, a third of it to 85.25. That entry came right there on an hourly chart. So yes, on a long-term position, I'm pinpointing moments in time on an hourly chart most of the time. Now, it's not always right, but that target one was 4.5 Rs. That means it made 4.5 times what was risked. Now it's only a third of the trade, the rest of it's still doing fine. But that is a moment in time to me. It's having, and it doesn't take tremendous skill to learn that. I've taught many people to do this. And it's not always what I do either. Sometimes I'm not sure and I have to wait for more confirmation. But when you're sure of a setup, you're there at the very birth of the setup, and it makes for a very nice trade. So that's an example, at least what I would consider to be an example of a moment in time, and that happens to be on a longer term position. Now, in all fairness, the second trade I took like this stopped. So I don't want to just show off the one that worked and then not say anything else. The second long-term trade stopped. But when a trade stops, how much did I lose? How many R's do you lose on a losing trade? An R, for those of you that are maybe newer, it just means how much money you're risking. If I'm risking $1,000 on a longer-term trade, this first third at the time I hit target one was up $4,500. How much does a losing trade cost, everybody? Just to put it in perspective and why you have to keep this balance sometimes. Yeah, you lose 1 hour on a losing trade, right? And then you have winning trades that hopefully make multiple times that. In the long term, I'm much more of a higher reward to risk trader. I've been keeping it over 4 for a while. So that all goes hand in hand with having great little moments in time for entries. What's the key to doing that? Well, the key is to know the chart well enough to say, hey, I can do that there. Hit target one a little quick. Oops, 4.6 hours. So the next part, going on with the article then, using technical analysis to find a moment in time when the odds are in your favor. That was the next one. It was GPS. They either make navigational systems or genes. I'm not sure. I forget. It had a cute little gap down consolidation. I played that consolidation just to go lower. And actually, that was not that type of entry there. I took a very confirmed entry. It just goes to show confirmed entry didn't matter because retail started getting bought And I think it had something to do with the KSS, but it doesn't matter. It's just neither here nor there why, as long as I didn't do anything wrong, which I did not. So the article, next, one of the odds in your favor. Well, that comes down to a matter of knowledge of technical patterns, period. Every so often, a stock will show its hand and give away a key secret. It'll let you in on when the pattern develops that appears to be something clear other than just random noise. So what do I have to say about that to back that up? Well, there's not much to say about this one. So there's Yoda. Remember that guy? He was in Star Wars, right? Remember he used to say, "May the odds be with you." I took that poster right off the internet. May the odds be with you. I remember him. He used to be a trader, I think. All right. So what's the secret here to getting the odds in your favor? Well, there's no secret here other than it's just chart skill. It's just understanding the chart. Having the odds in your favor is purely simply 100% a function of how well you know technical analysis, period. Perhaps the most direct correlation are two key technical concepts. To me, two of the big things are multiple time frame correlation and just simply great entries. Now, if you want more information on that, something I'm going to try and do a lot in the webinars this year is to help refer you to prior webinars because we have 4.5 years of stuff out there. When you go to look for some of these, remember that when you're on the free stuff page, there's an archive section. Only the last dozen or 16 events or whatever are on the DTS page, and then you have to go to the archive section to find the rest. So here are 3 ones that I think are, if you're interested in the topic, the best you can about improving your odds. Why technical analysis? The only 2 times you have an edge in a 3-legged stool. Now again, keep in mind, these are all supplemental to me to the actual seminar program I teach. That is a separate thing. That's a paid for event. These are all supplemental things. So if you're really serious about someday, you need to really learn technical analysis. And that's not going to come from reading a book. It's not going to come from, even though the free stuff page is immense, it's not going to come from that. The idea of all these great free resources for you is to begin your education, to try and really learn on your own, but then you're going to have to put forth a lot of effort to do that. It's not just going to come to you by osmosis. And for any of you that are out there, you can feel free to get a hold of me, to email me, to look at some trades, to talk about what you're doing, to talk about how you can better help train yourself, or if you want to eventually look to being trained by me, whatever you want to do. There's no sales team here. I don't push anybody to do anything. As a matter of fact, I've even told some people not to take a seminar because I don't feel they're remotely ready for it. So if you ever want to talk, you can always feel free. My email is, well, I always think everybody knows my email, but one of the problems is discipline training strategies is a heck of a long thing to write. Once you get it in Google, once it comes up, but there's my email, so you can click on that. All right, moving on. Then, you're not going to like this next part, guys, right? Then, here come the dreaded words. Then it becomes a matter of entry and management. In other words, here's where the psychology comes into play. Once you learn how the intelligence once you learn how, the intelligence actually required to enter and manage a trade is minimal. The ability to do so is rare. This is where you become your own worst enemy, and this is the level at even the most astute traders seldom pass. It's hard to be perfect in management in any case, but you at least got to get to a pretty good level. Most people absolutely, positively stink. It's probably their biggest flaw. Naturally, I hear from all kinds of people, and I hear from some people who don't have a clue what to do or how to read a chart, and they're not going to go anywhere till they do. But there's another group of people that I think have a pretty good understanding of the chart. Maybe not good enough to really make money, maybe it is, but they're never going to go anywhere because their management is so terrible. Many of you listening to me, you know I'm talking to you, right? If you're in that break-even blues, or even break-even for months, and you look around and you say, man, I know what I'm doing, I'm picking trades that are moving the right way, they're going the right direction, I break even again, and every week I say, well, I'm going to, I'll just do a little better next week in my management, and I never do. There's reasons for all of that. And if you don't fix it, you're just going to be in break-evensville forever. There's a level you have to jump to get beyond that. Management will eventually make or break you as a trader investor, a quote by me. an example here, and I just went to today. I thought I did a reasonable job on management on pins short. Pretty good entry. I shorted this rally, and again, it's strategically, it was a major resistance area, and that's one of my favorite things in the morning. Something, stupidly runs higher when it's in a downtrend, which this was. And I didn't get the best entry on this. I would have liked to have been in maybe, well, it was under 29. I guess that's not bad. The high of the day was 29.20, but I would have liked to have been in a little bit earlier. But I thought I did a reasonable job managing this. Entry, target one, to me, you have to take something there. Because if I'm wrong about this trade, that'll be the low of the day. But then I want to hang on to some for the bigger move lower. And I ended up taking the rest out there, which wasn't the low. Well, I also wanted to clear out by FOMC. I cut the chart off here at FOMC because after that was irrelevant to me. But it was reasonable management. The question is, how many times are you in a trade like this and you're out of half right here and you're out of all of it right there before I even took my first target? I find a lot of people that send me trades and that I talk to, that's the case for them, right? As a day trader, they theoretically are looking to hold stuff, and they have this magic formula that they have to have a 3 risk reward trade before they take it, and then they're out of the trade in 42 seconds with 12 cents. And I guess that's under the philosophy that you can't go broke taking a profit, but of course eventually they have a losing trade and it wipes out all those little tiny winning trades. And it gets very frustrating to do that. So that is my concept on my trade example on management. And then there is an event called Tips on Management, which naturally I think would be one of the most important ones you would want to see. Again, reminder, don't forget to search the archives page. It's probably there. And you can go to, just as a reminder, every video of DTS is posted on the DTS website on the free sub page and also on YouTube. You can go to either one. DTS, you can watch little thumbnails. You can watch in small view, or you can explode them up to watch the whole thing, and you can go from video to video at DTS. If you go to YouTube, of course, you got to load the next video. You have to go back to DTS if you have ones you want to watch. So whatever you want to watch is fine. On YouTube, nothing's archived. It's all just there in a forever list going backwards. You got to search for it. On the DTS page, you have to check the page and then check the archives page. Okay? Any questions so far? You are the world's quietest group I've ever had at an event. You get an award for that. No joking around, no answering questions, just very quiet. Amazing. And we even have some goofballs here, like Art and everybody that's here. Barry's in the house. The article, using technical analysis to find a moment in time where the odds are in your favor, then it becomes a matter of entry and management. In other words, having the knowledge to know and that the odds are in your favor, having the patience to wait for that moment, and then having the discipline to handle the trade properly when it goes in your favor and properly when it goes against you. Notice the 3 capitalized words: knowledge to know, patience to wait, discipline to handle. Sounds like the beginning to the Boy Scout creed, but it's a sentence you may want to cut out and paste by your monitor. There's an important one in there too that is always tough for people, and it's probably one of the biggest ones, and it's patience. Patience to me kind of cuts both ways. What do you think is the most important part of patience in trading? Give me some key words. You got the Klein short? Are you somebody I know? Are you in the room? Are you in the room or something with me? You may have. I don't know what name you're using. Wow, I had Klein as one of my top things on the screen today, and that was one of the ones I wanted to get. I never got to it today. Good job. Back to patience though, guys. What are the keywords for patience? Waiting for the moment you know will never happen. Waiting for a moment you never know will happen, right? Okay. Ulcers? Well, let me ask you this one then. Is patience more on the technical side of the equation or on the psychological side? This may be a very helpful talk, sort of. Yeah, you're all going to say psych, but I want you to think about this for a minute, because there's kind of a interconnection between psych and the technical side. Let me explain this to you, because the answer to psychological problems is confidence. It's confidence that comes through executing a plan, but to have confidence, you have to be somewhat successful, right? In other words, if you had great confidence that the trade you were taking or that the setup you're waiting for would come to the level you want, or if you had great confidence you would get to this target, wouldn't that relieve the anxiety, everybody? Go to the extreme. If you could see in the future and you know 100% certainty the stock would rally at $1.26, there would be no anxiety at all, correct? Is that true, everybody? There would be no anxiety at all, right? And go to the other extreme. If you didn't have a clue what you're looking at, and somebody says to you, well, you're in this trade long, um, do you think it's going to make it $1? You're going to have no clue. You'd be stressed out the whole time because you don't know if stocks are supposed to go up 10 cents or 50 cents or $40. You don't have a clue. So you'd be completely stressed. So my point is that the more certain you are about things, the less stress there is. In other words, the more knowledge you have, the more confidence you have, the less stressful you get. And it comes down to not just a matter of not just that one trade, because we can never be certain about one trade. Trading is about odds. So if I'm in one trade, it's not that I'm saying, well, I'm 90% certain I'll get to this target. I'm saying, you know what? This type of trade, done these before, most of the time it's going to go this far. And I'm good with that. And if this one doesn't make it, that's okay. The next one will. So when you think about it, do you see my point that I'm saying is that having the knowledge, understanding really what you're doing, builds confidence, and confidence then erodes the psychological issues and the whole patience thing, whether it's patience waiting for a target or, which is probably a worse demon, is patience waiting for the correct entry, right? Not having that fear of missing out. If you know that that stock, when it breaks out, is going to have a little failed breakout and slam lower, and you wait for that slam lower, you know to wait for that. You're not one of the people stuck in the stupid breakout. Now you're wondering if you should get out of it or not, correct? Does that make sense, everyone? Yeah. So patience is, sure, it's psychological, but the only way to overcome the psychology, any of your psychological problems, whatever they are, the only way to overcome them is through confidence. And confidence comes from, number one, understanding what you're doing at a very high level. And then number two, having a plan to execute what you do. So you know, hey, I was successful. Hey, I wasn't successful because I screwed up. Or, hey, I wasn't successful because it's just one of those that didn't work. And until you do that, you're never going to have confidence. You're never going to build confidence. You're never going to be able to progress as a trader. Trading is about odds. It's not about absolutes. And that's where the psychological issues come in, okay? So I want to make that point on that last slide. I see a question there. I think it's not related to what I'm talking about, so I'm going to hold off just a second. Are there any questions about the discussion going on? If not, I'll open it to anything. And there's a question here. What's your take on reverse ETFs like the UVXY that would surely test one's technical skill patience to the limit? Vic, I'm sorry, I don't understand at all what you mean by that, about testing your patience to the limit. Why is that different than trading anything else? Why would that test your patience any more than anything else? It's just another chart. It's just the inverse of whatever it's representing, right? I mean, are you saying you're more stressed out trading that than you are trading the VIX? Why would you be? It's the exact same chart, mirror image. Thanks, guys. And while Vic's typing, anyone else that has any questions about anything in the world, feel free. Jim, the Allen Parsons Pivots, they had some great songs in the 80s. Is that what you're talking about, the Allen Parsons Pivots? They were a great group. I forgot their songs, but the project. No, I've never heard of them. No. Oh, I want to get Vic. It was going down until announcements for polymeters. Okay, so Vic, are you stressed out trading the VIX, you mean, or you're stressed out trading an inverse indicator? Because you said the inverse indicator was like that mattered, right? It doesn't really matter. Well, of course, Vic. I mean, if you're sitting there, I mean, Vic, it's no different than if you're saying, oh, I was trading IBM the day they did earnings and I got killed. Well, I mean, yeah, if there's a big news announcement coming out, stay away. Guys, Vic, here's something, Vic, that just is absolutely right, and you may not agree with it, and you may hate me for saying it, whatever, but don't sit there and try and do this stupid stuff like trading the VIX on FOMC day. I don't do that because it's stupid. You go for the boring, stupid stuff. You find stocks that have clean patterns that you can make easy money on. You're like, it's like the old analogy, right? What cat is it? Jaguar? No, it's not the jaguar. The cheetah. The cheetah always goes after the slowest antelope, right? It doesn't go for the antelope that just entered the Olympics for the fastest speed of any antelope on the planet and try and take that one down and die trying. Why are you trading the VIX or the inverse VIX on FOMC day? You're just making crazy bets. If you want to make a bet like that, just go to Vegas or just simply take out puts on the whole market or take out calls on the whole market and go to sleep for a month. But there's no sense to doing that. And I'm not saying that because you're complaining about how stressful it is. There's no point in doing that to me at all. I avoid the news times. I avoid when things are hopping all over because we have no accuracy in what's happening. No clue. There are antelope Olympics, yes, in northern Siberia. All right, so let me see. Did I miss anything? See, Vic, I just have to expand it. You're listening to what they're saying, and you're trying to then rationalize that. Oh, they didn't even say when they were. I mean, it's so crazy, Vic. I can't even explain it to you. I mean, they could say the most bullish thing and the market would reverse because they were expecting something different. They could say that they're raising interest rates and the market could love it because to lower interest rates means now that they're afraid the economy is not recovering. I mean, I've heard interest rates being raised being the excuse for the market going up and the excuse for the market going down. Interest rates being lowered, the market goes up, the market goes down. It's all just garbage. It's all just, if the market needs to sell, it'll sell on any piece of news whatsoever. So it's silly to hang in. It's what I'm talking about. You don't sit there and listen to news and try and understand it. And the rest of the world says it's going up, but you say, no, 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 the news means it has to go down. You just don't do that. Do you have David, do you have to be good at accounting to be a good trader? Like if you, not good at accounting, do you think doesn't accounting specifically, David? Doesn't matter if you're an accountant at all, no. I mean, you have to be able to figure fifth grade math, if that's what you mean, but accounting specifically? Doesn't matter if you're an accountant, no. Why would you need accounting? Well, that's a different question. I mean, you need to be able to know if you're making money at the end of the week and know where it's coming from. Obviously, your account's up or down, but yeah, you need to be able to track well enough to say statistics on trades. David, you're a seminar person on the seminar resources page. There's a whole section about tracking what you do. And yeah, I think tracking is very important, but it's not more than fifth grade math. I mean, the tracking of our trades does not have to be complicated. You don't have to be an accountant to track, to figure out statistically how you're doing to improve what you do, right? It is very important, yeah. But it's not difficult. You just threw me because you used the word accounting. I mean, you don't need the skill of an accountant. You need the skill of a fifth grader. And to know what to look for. I mean, the math is that of a fifth grader. To know what to look for, I have it out there on that video for you, okay? And also, you can buy sheets too. I mean, there are, David, on my other stuff page, there's an ex-student of mine that I put a sheet on there. I mean, I have nothing to do with it. I don't care if you get it or not, but he has a tracking sheet that's all done, and you just fill it in. And you buy it once, it's cheap. It's 100 or 200 bucks or something. And so if you don't like creating stuff like that, you can just use that. Or there's others if you Google it that you can use if you don't like that as well too. Okay. Well, it's funny, David. Tracking your stuff is a lot of fun when you're making money. See how you're making it. When it's not fun is when you're losing money to figure out where you're losing it, right? Oh, we have David Blank and David B. See you, David Blank. Yes, yes. I think some commonalities that good traders have are that they absolutely have resolved to the fact that they have to have some kind of plan, they have to have patience, and then they have to track what they do. David, you've heard me say, right, no more than 40 or 50 times that the biggest gold that there is for you, the most greatest information that you have as a trader, once you get going, once you've been taught how to trade, the next biggest source of information you have is in your past trades, right? If you've not heard me say that 13 times, then you've never been through the seminar program once. And I think you have, right? Got to learn what you're doing, and then after that, you become the source of your best information. What did you do the last 5 trades? And so many people just close up their books at the end of the day, never look at them again. How can you improve if you don't even know if you did what you're supposed to do, and if you did do what you're supposed to do, if it still makes sense to do that or not? That's how people can self-teach themselves. It takes a lot of trial and error. It takes a long time. But if you're really fantastic at follow-up, I mean, if you were like a very statistical, mathematic person, you could figure out how to trade. It'll take a while. You need a lot of, information, but you could start from scratch, probably not even know what a chart is, and just figure, continuously change and improve what you do until you hit the secrets, kind of. But most people can't do that. All right. Anything else? I don't think I missed any questions. If I did, please put them back out there again, copy and paste them. All right. All right, guys, that should do it then. Have a great evening. See you next Wednesday, right? Next Wednesday. Good night, guys.